everybody? It's JTGFX, Instagram handle JTG_FX, and my personal / fitness page is at Joey the Greek. So today, for the next installment of the Foundation series, we're going to be talking about RSI, and that is the Relative Strength Index. It's an indicator that is on my charts, but I'm going to teach you guys the right way to trade it, because a lot of people have a very, they Google RSI on YouTube, and they find a page that has 1 million views, 500,000 views, a video about RSI, and it's very basic. I mean, there's not a ton of information on the right way to trade RSI, so you're stuck on a very basic level. But we're going to go more in depth so you can utilize the RSI way more efficiently and much more effectively. So these are the topics we're going to go over. First, we're going to get you guys setting it up on your charts, so we're going to configure it the right way. We're going to go over overbought and oversold conditions, and how to trade when it's overbought or oversold, using RSI for bullish or bearish bias. So I'm going to teach you guys how to get a bias based off the RSI, and then lastly, trend lines and pin bar divergent. We're going to dive into the charts, and we'll see examples of what I mean by that. So these are the 4 topics we're going to be discussing about RSI. So try to make this video quick for you guys, and let's dive right in. So what do we see here? We see EU FX futures. Let's go to configuration. So you're gonna look for RSI in your charts on TradingView or other platforms. If you can't find RSI, just type Relative Strength Index and you'll be able to find it. The set configuration, what mostly everybody uses, is 70-30. So on the length, keep it to 14. On the overbought, you leave it to 70. Oversold, you leave it to 30. In bull market conditions or bear market conditions, it's more ideal to put overbought to 80 and oversold to 20. But in this case, we'll leave it 70-30. So that takes out setting it up, guys. So fairly simple. Search relative strength index, 70-30. Good. So now what we're going to talk about next is overbought and oversold conditions. So how to effectively trade. Let me just remove these drawings here. How to effectively trade when it's overbought or oversold. So let's look at it on a 15-minute perspective, and you could do this on all time frames, but we're going to do on the 15-minute for right now. So let's take a look here, right here. All right, massive expansion upwards. So what you want to do is when it dips below the 30, this is the 30 mark line for oversold. When it dips below, you don't want to, I mean, you could buy right here, but what you want to wait for is for when it crosses past the line. This overbought, this oversold line, that's when you make your buy, and you see what happened, expansion. So as you can see, when it goes to overbought, what follows next, you would buy, you'd be in the green, expansion. Now keep in mind, this is not fail proof. This is just extra confluence from what price action is doing. So you always want to have confluence, and you always want to see what price is doing, but you want to use RSI to 80. That's what it's there for. Another example, it's in oversold conditions, crosses over. All right, shoots up on the RSI, pulls back. If you had bought, this would have been a quick scalp. Like I said, it doesn't work all the time, but this is the oversold and overbought condition. That's basically how it works. And that's what I'm giving you guys, is basically what you'd find searching on a YouTube video. So I'm giving you obviously what you'd find, but we're going to go more in depth. Look at this example. If you had shorted right here, when it crosses, not exactly right here because it's if you look at price action, it's still remaining in about the same on the same level. It's consolidating in a 15-minute. But once it crosses, you do want short there. A few minutes later, a candle later, a couple candles later, see what happens. You drop. And the same works on. The same will work. Hold on 1 second. The same will work, either way. So the concept's for either side. So look at this. You had taken it short here, came back up again. Would have been a failing trade there. So this is why the way you're taught to use RSIs have failed. But now let's go into why. Let's go into the correct way to use it. So what we're going to do now, we're going to go more in depth on the right way to use RSI. So what I'm going to do is we're going to go on the daily. We're going to divide the RSI right on the 50 level. So I'm going to try to get as close as I can to the 50 level. As close as I can. So this line is going to differentiate the 50 level above and below. So that's the 70, 50, 30. So how you want to pick a bias, all right? We'll start with if it's bullish. If price is bullish, it's going to stay above its prices on that RSI is going to stay above the 50 level. So as you can see here, it doesn't go below 50. It goes, cuts right through the 50 level, but goes back up. Consistently staying above the 50 level. And what does price show us while it's staying above the 50 level? See a rise up. All right? See a rise up. And price is staying above the 50 level. Let's now look at it in a bearish condition. Below the 50 level. Stays below the 50 level. There it continues its bearish downtrend. Now, if price is above the 50, the longer it stays above the 50, it can cut through the 50, as you can see, here, but continue staying above the 50. You can have your bullish bias. If it's below the 50, it's a bearish bias. All right. And now, if you guys look at part 2 of my installments of the foundation series, you can also have added confluence with the indicator crossovers. So that's how you build extra confluence with your trades. Now, the longer price stays in the 50 level, the more likely you're going to see price consolidate. So as you see here, it's hanging around the 50 level. Price on the RSI is hanging around the 50 level. If you look to see what prices and candles are doing, it's staying. What price is doing, it's staying in a consolidation. What happens after consolidation is expansion. As you can see here, expansion to the downside, followed by pullback, followed by more expansion to the downside. So let's go over that again. The amount of time above the 50, bullish bias, and you can apply this to other time frames as well. More time below the 50 level, bearish bias. If the RSI is hanging around the 50 level, as you can see here, it's basically cutting up and below the 50 level. Consolidation. Price is consolidated. It's in a consolidation. But keep in mind, after consolidation comes expansion, either to the upside or downside. All right, so now we will talk about the last part of this about the RSI is using trend lines and pin divergence, basically, guys. So now this is the last part of the RSI. We're talking about the RSI. So now this is a slide I quickly made, and I have a great price example what we're going to talk about. So we can see that price made a higher high, and on the RSI it also made a higher high. So when you see that, that price is respecting the trend line. So it bounced from the trend line, and what makes this divergence extra gives you extra confidence on taking the trade is that you see price bounced and it respected the trend line, but it also made a pin bar. All right, so the first when price stabilized, it stabilized at a specific support level, and you see that price bounced. It made a pullback, and I made a higher high where it bounced again. But price also made the candle was a pin bar. So the trend line, respect the trend line, higher highs, and pin bars gives you what we call divergence, and that would have been a solid trade because followed by the pin bars, RSI divergence, followed by expansion. As you see that large green candle up is what we call expansion.